All right, what's going on, everyone? I want to go over this ES long that I took last Thursday. And I wanted to go over this one in particular because I think this trade really showcases how I use edgeful statistics in my daily trading to determine a bias coming into the morning. So first off, I do want to show proof of execution on the trade. So if you see right here, I got long on the break and retest of this inversion fair value gap, and we got out towards the high of the range, targeting some 1 hour liquidity. So anyway, getting into the trade. If you see here, we have our midnight open price marked out. If you guys are unaware of what that is, it is the 12 a.m. Eastern Standard Time opening price. Now, this is going to be the key on how we determine bias. And we're going to go over statistical data with Edgeful to kind of showcase it. So we got ES data pulled up. The name of the report from Edgeful is called the ICT Opening Retracement. And this is the statistics that I'm going to be most focused on. So if you see right here, when we open below that midnight opening price, we retrace to it in the New York session 69% of the time for the last year. Now, going back to the charts, how can we use this to our advantage to determine a bias for the day? Well, very simply, if you see right here, I have premium and discount marked on the chart here. So anything below the midnight opening price in the first couple of hours of the New York session, I'm going to see as a discount in the daily trading range, and vice versa. If we are opening up above midnight open, I look at that we are in a premium of the daily trading range. Now, if we are in a discount, it means that I am more inclined to look for long entries up towards that midnight opening price. So that's how we determine the beginning of our bias for the day. But of course, we need other confluences, right? We can't just look at one single thing and come up with high probability trades. Now, if we look at this indicator right here, this is actually one of the cool things about Edgeful. If you do have access to the platform, they have custom indicators that go hand in hand with the reports that they put out. So we are using the ICT opening retracement indicator, and boom, it's going to plot that on the chart for us. Now, what I need to do is go to the higher time frames to help get more context on how else I can feed that long bias, right? I can't just look at the midnight opening retracement report. So what I'm seeing on the hourly time frame here is that we've been in a range. We've been trading in a range since last week. And what did we do on this pullback that is significant to me? Well, we swept a 1 hour swing low, right? So we have taken some higher time frame liquidity and then started shifting back towards the upside. So when that happens, what are my eyes going to be drawn to for a draw on liquidity? Well, it was this right here. So we have these relative equal highs on the hourly time frame. So as you guys know, I like to target double tops and double bottoms as a target. I don't use them as classic support and resistance. I actually like to target these because I believe the market is drawn towards taking out those equal highs and lows. So then if we go down to a 5-minute, what is one more thing I can look at? So we have a higher time frame draw on liquidity, right? Which is those hourly equal highs. Let's just pull that out here so we know where it is. Going back to the 5-minute, we also have this 5-minute bullish fair value gap. So for me, it was very simple. I'm sticking to that long bias, right? Because we're opening below midnight and we're in a discount to the daily trading range. I know that we have swept higher time frame liquidity. So this 1 hour swing low, we have taken it out. And instead of displacing lower, showing short continuation, we snap back higher and we shift in market structure, right? We shift market structure right here, putting in a higher low and then a higher high. So then this 5-minute bullish fair value gap was my line in the sand. As long as we don't get 5-minute closures below this level, I'm going to stick to the long bias, knowing we are below midnight, so we're in a discount to the daily trading range. We are in an hourly range, and we have just swept an hourly swing low. And on top of that, we have a higher time frame draw on liquidity, which is those relative equal highs on the hourly chart. Now, I don't need to hold a trade all the way up to these highs, right? Obviously, the market did go there, and that's great. The analysis proved to be correct. But if I can get good risk reward and target the low hanging fruit, like I did right here in this setup, again, if we pull up that screenshot one more time, so you see the executions, we end up going much higher later in the day, but it doesn't matter to me. I targeted a 1 hour high and I got good risk reward. This trade yielded about 2.5 R. So how do I get my entry? Because that's the last piece of criteria that we need, right? We have all of the data on our side and we have the higher time frame context and targets as well. That's where the 1 minute comes in. So what I am seeing is that we're bouncing from this 5 minute bullish fair value gap. We shift market structure on the 1 minute, and I was looking at this inverse fair value gap right here. So this is our inversion, and that is the last bullish confirmation I need to enter my long. So right there, we close above that bearish fair value gap, break, retest it perfectly, and that's where I got long. And at that point, it's very simple. The way I like to manage my trades, everyone's a little different. I do like to move my stops to break even once it's reached about 1 to 1.5 R. So once the trade went here to 1.5 R, I move my stops to break even so that the trade is risk free. And then we target that 1 hour swing high. And that was the trade. Really quick delivery. And that's when you actually have the correct draw on liquidity and you have the time frame correct where the market is going to be volatile enough. You know, we're still in the first hour of the New York session, so market is moving, there's volume. You're going to get those quicker moves, and that was it for me on the day. I think I took some more trades later in the afternoon, but this was the high probability trade that yielded the most of the profit that I made on Thursday. So I wanted to go over that one. That's about it. If you guys have any questions or you want to check out Edgeful, make sure to click the link. I'm going to put it below this video, and you could try out Edgeful for a few days for free. All right. Peace.